The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. We like to come to you at this time, by the way.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? Well, a lot of earnings. We're up 19 points. Volume is thin and thready. They always say that on the news when someone's about ready to die. I mean, on TV when someone's ready to die. How's the pulse? It's thin and thready. I don't know what that actually means. Maybe someone will call in or email me at path@tfnn.com and tell me. But we still don't have a lot of juice. 3.5 billion shares on the CBOE consolidated tape, which is okay, but it's not exciting. Let's put it that way. We have no real signs of strength except in a couple of stocks, and we'll talk about that today. A lot of stocks just up on the bare minimum to hold them up, which always makes me think that the market could be brittle. Brittle things, like eggs, you carry them, you can do something, but eventually you drop one, and we'll talk about that. But as I said, you want to look at the light volume. You also want to look at the strength of the dollar. 97.75 is the last tick I see in this. So the myth of the dollar going south of the border has yet to be realized. And of course, you want to look, as soon as I look at that, it makes me want to think about looking at the TLT. Let me find that little guy right here. Where is it at? And no movement whatsoever. Well, we're up about 0.2%, almost nothing. Let me put it that way. So, what do you get in that? Not a whole lot. Apple, I've been talking with Tom O'Brien for a year or two about how minuscule the PC, the personal computer business is, either in laptop or anything else for Apple. It's got to be 3% of their total profit. Maybe. Could be 5, maybe. I don't know. Infinitesimal. Anyway, they lost an appeal to get an exemption for tariffs. And they were amply warned a year and a half ago that they probably should find elsewhere to move their manufacturing. But everybody wanted to think that if they could just pacify the Chinese communists enough that they'd get some kind of river of gold coming out of China. I think these folks are incredibly naive to think that the Chi-Coms will let any kind of significant cash ever flow out of their country, that they can't easily reel back in. Of course, all you got to do is look at the way that they're treating Hong Kong right now to see what the future of, let's say, Taiwan would be. If I was Taiwan, I'd be working on some nuclear weapons day and night, because that's probably the only thing that's going to keep the Red Menace out of their country long term. And of course, a day or two doesn't go by without some kind of saber rattling between the Russians and the Chinese, between the Chinese and us, and even the UK, and of course Iran deciding that it needs to board every ship so it can get a nuclear weapon and start terrorizing everybody. I guess they've been terrorizing everybody for a while, but terrorizing them on a more massive scale. I guess they're trying to get up to that Hitler level of evil. What else do we have? That's kind of it. We're going to go through the earnings and that stuff today. Got a little bit of history, and then we'll get right into it. Got a lot of response to yesterday's show. Hope everybody got everybody I got an email from, I did respond to, and that will be interesting. Anyway, let's do a little history, and then we'll get on to some charts on earnings.
Then it's all Just a little bit of history repeating.
On this day in 1775, the U.S. postal system is established by the Second Continental Congress with Benjamin Franklin as its first postmaster general. I always wondered why they had what war had to do, general, had to do anything to do with that. Who knows? Maybe it was just the way everybody talked at the time. Franklin, who lived from 1706 to 1790, put in place the foundation for many aspects of today's mail system. And of course, before that, there was no mail system in the United States. Basically, you left your mail at the tavern while you were having a big thing of ale. And hopefully, eventually, you bought a stamp, you got on a boat and went to England somewhere. But there really wasn't much in the way of delivery in the United States. But on this day in 1775, about a year before we declared independence. And I think that's all I got to say about that. What else do we have? As I said, looking at a lot of the earnings that are out today, kind of interesting. Of course, Google's getting a lot of information thrown their way. Been under the lamp pretty hard to generate some more profits. I don't think anything's considerably changed other than the fact that maybe they moved some of the profits into this quarter. It doesn't look to me like, from looking from the outside, that much has changed. A lot of times the way that you close your books and able to move profits around. But one thing that you also should know, of course, is that they changed the way that they report. They don't tell you how much is made in YouTube anymore. I don't know if that's a good thing or a bad thing, but they're certainly not there's less transparency. And that always makes me wonder if something else is going on. But again, you can move things around in a big company, move around things for a year before the books catch up with you. But I really haven't seen that much difference out there. Probably the biggest difference I've seen is YouTube is the I'm going to call it a deluge, a tsunami of ads when you try to watch anything anymore. And then, of course, they try to push you into paying $10 a month to watch everything ad-free. So, of course, I just downloaded an ad blanker to get rid of those ads. But I don't know if there's anything else you can actually say that's fairly interesting about this, other than the fact that there's a bigger issue that I'll be talking about with Tom O'Brien at 3:30 about something that encapsulates Microsoft, Google, and Amazon together. And maybe we've got the first warning sign of a part of all three of those businesses that may be changing. So we'll talk about that. What else do we have? Of course, a lot of other discussions about McDonald's. Up fairly sharply, rolled back over and back into the trading range. Again, just not enough juice in most of these to reach escape velocity. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As you said, we're going to go through earnings fairly quickly here, and then we'll talk about earnings next week. Of course, probably not a lot going to happen. The markets into the FOMC meetings have pretty much gone up on light volume to the point where it almost seems to me like the market's holding a gun to the side of the head of the FOMC members saying, dance, dance. That's what they always said in the cowboy movies, right? They always had to pulled out their 6-shooters and shot at the guy's feet. Dance, dance. And that seemed to be about it. I can't really put my arms around a lot about what's going on. Anyway, McDonald's up, back in the trading range. Yeah, again, it's not that the earnings these are bad. It's just that they're not that much better than everybody hoped. We continue to average about a 2% over the S&P 500 above the last quarter, which is fairly good. But again, it's not going to match the move that we had in the market. So you got to say that we are paying more, hitting an EPS of about 18. And of course, generally the time to run for the hills is an EPS of 19. So we're pretty close to that already. And of course, the time to buy is an EPS around 10. But we're not getting that. And of course, maybe that has a little bit to do with Europe and the UK and Draghi this week, especially with the dollar. But we'll soldier on. I suspect that we will find something at the FOMC meeting, and that is going to set the tone probably for the next 2 months before we get into September. And at that point, maybe we do enough back and forth to get these levels kind of broken in. And then maybe we can find higher prices. I don't see a lot out here that says lower prices. I just see a whole lot that says not higher prices either. Intel came out, rolled over, and down today. This had done nothing but gone back up to its gap at about $51. Again, I find myself fairly bearish on Intel, not in the fact that it's going to zero. or anything like that. But the fact that it's probably range-bound like Microsoft was from 2000 to 2013, you could have a very long time unless they get rid of the current CEO. He's made some major mistakes. Another point we're going to talk about, at least in my opinion, he's made mistakes. He actually may have made a good deal selling the cell phone modem business to Apple this week. And why I think it's probably a bad idea for Apple. We've kind of touched on it before, but I will bring it up. It was something I was warned about 100 times in the business I was in, and we'll talk about that. But it was beyond this point be dragons, one of those signs. We'll talk, like I said, with Tom O'Brien about it at 3:30. Anyway, we got to that high. Were earnings that good? No, they just kind of ran all the shorts, which is about everything that's happening now. I continue to say that there's bigger problems afoot in this whole sector. AMD, of course, doing the same kind of thing, just hanging out at these highs. It's back up for its second retrace and test. Again, any close below the 3x3 displaced moving average on AMD, and I would run, not walk away from it, because I suspect it's going to right back down around the $29 level, and probably in a real hurry. Especially you've got Intel coming after it with and NVIDIA with its own video graphics cards business. You've got AMD itself being extremely aggressive in price cutting. That means that the margins are not going to go up. They're probably going to go down. The only good sign that's happened to AMD is that there's a trickle of video card sales back into the Bitcoin mining business. Above 8,000, about 8,500 to 8,000 in Norwegian countries that get metered a penny for a kilowatt hour. You can make money at about $8,000 to about $8,500 for mining Bitcoins. Those folks are back at it to some extent. But again, profit margins fairly minor, fairly small. And right now, most of them would be better off in the grocery business as far as a profit margin. Yeah. There's a lot of that books stuff going on here. Okay, what else do we have that we want to look at? One of the ones I think looking forward tells me a great deal is the Buffett-backed Mohawk Industries and carpet. We've been looking at a lot of these home sellers and people around homes having huge problems. I was kind of surprised that Buffett's group let this thing fall as hard as it has. Got down to 127.27. When we look at, what is it, PHM, that had Pulte Group, it basically did the same thing. Pretty much got, some fairly decent weakness in that home sector in certain areas of the country, especially anywhere where they're high tax, California and New York. We saw a lot of articles over the last couple of weeks here in Florida about the absolute deluge of people leaving New York to come down to Florida, especially the East Coast, down around Miami, and headed for that place. About 40% of the condo sales are going from somebody in the 5 boroughs of New York City. And that may tell you a little bit about the escape from New York. But other than that, a few bright spots, people moving to Las Vegas, Texas, and Florida. There aren't a lot of strong markets out here to be had in the housing business. And I think we've seen with the Pulte drop and now with the Mohawk Carpets Group that Buffett has, he's not even able to hold this up. He's generally, when you own 40% of a company or 50%, doesn't take a lot just to push it around a bit. But I guess there's a few laws that restrict how much they can manipulate it. But at this point, I think you got the signal out here of 156.60 down to 127.27. To Amazon, of course, a little weaker. Not much in the charts. They can kind of engineer their books to say anything they want to. There is something buried deeper in this that I think is more important. But like I said, we'll talk about that at a longer pace. Starbucks, kind of really amazed by this since they've gotten rid of their old CEO, who's always running around sticking his thumb somewhere. Pretty good move. Who knew that getting rid of the blowhardy CEO would let this stock take off as much as it has? We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, Starbucks, one of the few stocks out here actually giving a real sign of strength. Not a lot of signals coming in here that this thing was going to bounce as strong as it did, but I think we've had a lot since the previous CEO has left. A lot of the political turmoil following Starbucks has at least diminished somewhat. Twitter. Again, most of these stocks that are going higher are just running in headlong into huge long-term downtrends. In this case, Twitter gapped down on the 27th of July of 2018. We're just back into that now. They've got a lot of issues. I don't think any of those issues really change in the near future. And again, probably some issues with antitrust going forward, but it's probably on the tail end of those and not as big as a lot of people have seen. I always wonder whether or not the format for Twitter, I mean, originally it was a very interesting idea when phones had low bandwidth, but no real reason to see it. They've kind of abandoned that 140 character thing. It still makes sense in maybe the political realm where you communicate on bumper stickers because no one has any amount of time to go deep into an issue. But certainly that's about it. I always wonder, is this a fad? I continue to think probably it is. The question is just when does it go away and why does it make any sense anymore? Other than it's just one of the platforms that's available, I don't see anything that is a moat around this. That doesn't mean someone else could do it, or two, everybody's going to get bored with it. Although a lot of people tell me that the kids, the youths of America and other places have moved on to Instagram and everything else, and Twitter gets a lot of play in the news, but I don't know if it actually does that much. Now, they had a nice move up, but again, I mean, you're talking about a down move of 123 million shares today being challenged with 43 million shares, filling about half the gap. That's about where I like to pull the trigger on shorts if they've come up with fairly light energy. And this one certainly has off that June 3rd low. It didn't come up with a lot of juice other than the last maybe 2 days of anything like that. I would watch for some kind of major signal of a turnaround on this one. More than anything, I suspect it's a fairly there's fairly a lot of short covering in this one over the next 3 days. So I would look to see if it has any weakness come Thursday next week. Expedia.com, again, filling its gap, going back for a little bit. Gap down in Expedia was on the 27th of October in 2017. You had let's call it 21 million shares into it today with 2.7 million shares. Again, filled almost all of it, kind of came back. But you can imagine anybody that was in this thing when it threw up all over the floor back in October of 2017 is kissing the ground and blessing the stars that they got their cash back if they held it this long. I don't know if they did, but man, from 140 down to 96 bucks, it's taken a year to get their cash back. I think it's probably left a little bit of a bad taste in everybody's mouth. Now, the question I have is going into Brexit and everything. Right now, it's fairly easy to get around. Once the summer's over, we're really going to get into the hard Brexit come October. I wonder what that does for international travel, mostly because Expedia makes most of its money on selling hotel rooms and rental cars. Doesn't make that much on renting hotel suites and stuff. That's kind of the lost leader for this business. What's the other one? Bookings.com. Let's take a quick look at that one. What is that? BKNG. I will forever call it what it really is, and that's Priceline. But, what can you say? Everybody likes to change their name. Up a little bit, not anything in the way of volume, though. It's back up into a 750,000 share day with 250,000 shares. But if there's going to be some severe weakness in these booking companies, it's going to come this fall. And it just depends on how hard it is to travel country to country, and how much they drop the chalupa on making sure that it's easy for everybody to do that, like Americans, to go over there and visit what used to be jolly old England, now more of a metropolitan city like London without a lot of character. Maybe a few old buildings, but they're losing a great deal of the old English character. Maybe not. Maybe people just continue on and go to France. Who knows? Of course, it's hotter than Hades there, too. Mattel, as we looked at this, a lot of these stocks just massively shorted. And Mattel, there's all these folks that just always assume that these things get blown apart, they're going to go to zero. They almost always have some kind of counter trend move that is sharp and destructive to the health of those shorting. But again, kind of tough to see that Mattel is a stock that you want to short come the fall and toy selling season. It may not do much, but I don't think it's going down. Generally, the idea is to come into this one, February, March, when they announced that toy sales weren't as good as everybody thought that they would be one day. The biggest loser out here today is MMSI. Merit Medical System dropped the chalupa down to $39.11 after having a pretty horrible day yesterday, and looked like a lot of people who were looking at this thing coming out with fairly horrible earnings. Next low actually looks like this is going to run for it. The November 13th low of 2017, $36.21. But certainly it's blown up everything. What else did we want to look at? Stryker, SYK. Another gap higher. Not anything in the way of volume, though, in this one. Again, early morning short covering, got to 222.59, rolled over more like Intel. A little bit more room, and it's right back into the trading range. So you get a lot of these, but you don't get a lot of carry through. Google seems to be the exception. And like I said, we're averaging about 2% growth when most everybody was looking for 4 or 5% in this earnings cycle. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. We're continuing to look at what's going on. In fact, let's do this, because I wanted to get into it because I know we only have a little bit of time left in this show. But I want to talk about earnings next week as we get into it. And for whatever reason, it's broken. Okay, I will figure out why. Let's take a look, though. I think I have yet another way to get them. There we go. Okay. Monday morning, we've got Armstrong Worldwide. Of course, floor covering company, if I'm not mistaken. See if they've got anything going on. Well, they had kind of a swing yesterday. Not much reaction today. Booz Allen Hamilton. Of course, Tower Semiconductor. Take a look at that. TSEM on Monday morning. And again, most of these tech stocks in the semi space aren't doing really much in the context over time, but we shall see. After the bell on Monday, Beyond Meat gets its first earnings announcement, BYND. Look at that. Up a little bit going into earnings, a little doji out here. I don't think you can make anything about what's going on in it. Maybe the hype kind of starting to wind down a little bit. I haven't heard much about it this week. I'm sure we'll hear a lot about it come Monday. AK Steel also after the bell on Monday. Again, these steel stocks just telling me a whole lot of nothing about what's going on. They'll have the big move. Alumina, IMNN, which dropped the chalupa a little while ago. I don't think there's anything new to say about that in the pre-announcement as this blew apart. NXPI probably give us a little bit of a view into smartphones. Of course, they make the near-field communication device that goes in these. I never really believe that many people use them, or it's that big of a deal, or other people probably couldn't make something similar to it. But it basically got right into its gap down going back to the May 7th, and it did it on decent volume. You got about almost 7 million shares on the 24th. But then it's rolled right back down and into it. So again, a lot of thought into this is that we need to start building steam to go build and break higher prices. But that looks like it's going to take a little while, if not months, and maybe a little while into fall before we get it. Maybe you get that half-point rake that everybody is fantasizing about on Wednesday. Maybe that does something, but not much. The Russian Google Yandex is, well, that's wrong. I don't know why that is. it's wrong. I'll have to check on it. ABBV, BB, and no movement in that. See what else? ALK, Alaska Air Group, almost no movement on that one today, which is kind of interesting on earnings. Boom, B-O-O-M. DMC Global did go boom today, went and filled its gap up from April 3rd that had 642,000 shares, down on 1.7 million shares today. Let's get the profile and read that just to make sure what's going on. Engages in technical product and processes serving the energy, industrial, infrastructural markets worldwide. Company operates NobelClad and Dyna Energetics. The NobelClad segment produces an explosion welded clad metal plates for use in the construction of heavy corrosion-resistant pressure vessels. Okay. Heat exchangers for oil and gas. Guess if you need to make a boiler and it needs to be extra heavy, guess what these guys do. Certainly a huge move down, filling this gap. One more gap down here from 35 to 40. Does not look all that exciting. What else do we have coming next week? See if there's anything coming on. We'll look at Tuesday. Tuesday, of course, the day before infamy, as the FOMC comes out at 2 o'clock on Wednesday, is MasterCard. Again, zero pullback. This thing just continues to move up. And kind of a big disparity between the companies in this kind of business and banks in the United States and Europe. But, you know, we're basically in the United States a fee-based company, and it's the fees that they nickel and dime everybody with that they're making money with at both MasterCard and Visa. Those fees are not legal in most of Europe, and why they've performed less well than MasterCard and Visa here in the States. Procter & Gamble, a company that I went by almost daily in the 90s. Again, kind of always the trade to go into when you're worried about what's going to happen, because guess what? People are always buying soap and toothpaste and all that stuff. Heard kind of a story that Amazon had put these guys out of business. I don't like the energy all the way going back to basically the 1st of May. This thing has gone up on no juice whatsoever. And again, it just, the more people piling into it thinking it's a safety play, generally those are just the opposite. On Tuesday, we also have Altria, the cigarette business, just lower highs and higher lows, so no real thing to read out of that. UAA, also on Tuesday as we come up here. This one's back to its huge gap down, that absolutely where this thing was absolutely bludgeoned, hung, dragged behind the car, shot, stabbed, everything back on the 31st of January 2017, and blown apart, lost 30, I think it was 30% that day. I kind of vaguely remember this thing. Down on 54 million shares that day. You're finally coming back up and filling that. Is just no volume up here. We'll see what it does come Tuesday. Question in the den, or statement in the den of AVLR. It's one of the IPOs that I said I like because these guys work out all the details on a cloud-based system for taxes and tariffs internationally. I just never could find a good spot where this thing acted technically correct, where I could buy it, and it's just really just gone up. But it's one of those stocks that just get away from you. And I'm not one to chase, because every time I have chased, generally it's like a dog chasing a car, and the car suddenly stopping. You generally get your nose put into the tailpipe. It was one I saw. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Tuesday, we also have ConocoPhillips. Actually, one of the first really bullish signs for crude came out today with the rig count being down. Now, again, a lot of this has been on some of the storms on the Gulf. We'll see if this actually continues. But I think even the first ray of light that makes me think that higher crude prices could actually last longer than shorter is this Baker Hughes number today. I find that interesting. We'll see if it continues on. You need something more of a trend than a one-off of event, but we'll see. Like I said, ConocoPhillips Tuesday morning. You also have Merck, Sony, Ralph Lauren, Corning, Eli Lilly on Tuesday, and Cummings, D.H. Horton. Let's take a look at that. See how it did after some of the other housing stocks. Doesn't seem to have bothered it much today, holding the price a lot better than you might think. But again, these things all seem to hold up until they don't. See what we get into Wednesday, because that'll be interesting. Once we get the Fed out of the way, you got General Motors, General Electric before the bell, Garmin also, American Towers, and Molson in the morning. Now, after the bell on Wednesday, we get Qualcomm, Twilio, Western Digital, Zynga, Fitbit, Boot Barn Holdings, Occidental Petroleum. So probably the big one's going to be Qualcomm. You'll have the Fed out of the way, and if they make everybody happy, then Qualcomm's earnings will probably get a little leeway. If not, a horrible night to be out on earnings after the FOMC if they drop the chalupa. See you with Tom O'Brien at 3:30. In the meantime, so when you can, not when you have to. See you Monday. Same bat channel, same bat time.
Larry Pez